Hello, hi, it's Adil bringing you an insight or an answer to a question that was just posed to me on Twitter. Rather than typing, I thought I'd just do a quick video, just basically explaining the currency pair Aussie USD. The question that's been posed to me by Saeed Zaman on Twitter basically is, do I think there will be a gap lower on the Aussie, and will that gap obviously continue? Will it be a continuation gap, or will that gap close? Or basically, what will happen post Chinese data over the weekend? That's obviously missed expectations. Okay, my concerns with regards to a short Aussie, as you can see, this is the Aussie trading right now. This is a daily chart, or the Aussie pair, should I say, right now. My concerns with regards to being overtly bearish on the Aussie is that Chinese data, basically, or weak China, has already been priced into a large degree already, given the drop that we've seen, obviously down to 0.77. Now, the three arguments that I've posted basically are that yes, you certainly will have the negative effect of the Chinese data on the Aussie, and obviously the Shanghai being down Friday as well, that obviously will have a negative impact as well. But from my perspective, I would not like to be bearish. The reason why: number one, weaker US GDP data on Friday equals negative dollar. Number two, the Democrats and the Yellen link, or the leak that was out on Thursday, if I can recollect correctly, basically stated that there will be no rate hikes in the foreseeable future. Well, not suddenly anyway, in the next 6 months or even more. Okay, so this so-called talk of a June rate increase certainly has been obviously taken out of the equation, because Miss Yellen went out of her way to leak this information to the markets intentionally, because the misconceptions post the FOMC minutes. She basically had she'd not anticipated, but she expected a neutral stroke dovish obviously stance by the market, and the market was very hawkish because they drove the dollar higher. So she had to leak that out in order to redress that wrong, or basically rebalance the perspective or the expectations of the market. So they are very intelligent, the way in which they manipulate the markets and the way in which they want to manipulate expectations. So that's the from that side of the equation. If Miss Yellen, and as we all know, we don't want to fight central banks, so if Miss Yellen is now concerned about a strong dollar policy, then that certainly is needs to be taken into equation with regards to being short Aussie, because if the dollar is weak, how can you short the Aussie itself? Okay, so that's one other side of the equation. And the third one, obviously, weak channel, like I said, has already been priced in, so obviously take that into consideration. Also, with regards to the euro obviously affects the Aussie, and the Kiwi can affect the Aussie as well, so certainly take that into the equation as well. Okay, and that hopefully should give you your answer. Now, from a technical perspective, let's just have a look. From fundamentals, I've already explained that you need to be very careful with regards to a short Aussie, or I would be very careful with regards to a short Aussie, even though the weekly chart certainly does indicate short from a price action perspective. A daily chart, obviously, you can see a potential doji candle there, a potential reversal signal. A 4-hour chart, again, you have bottoming tails, so you have a failed bull flag, or bear flag, should I say. So when you see bottoming tail, bottoming tail, bottoming tail, bottoming tail, bottoming tail, okay, this is not exactly a bearish pattern that I would be eager to go into. Okay, so 60-minute chart, what can you see here? You basically have a scenario where you have a potential inverted head and shoulders formation. Okay, so bear that in mind, and you can zoom in and look at your 10-minute chart. The whole concept on your 60-minute chart is that we've not made lower highs, and this 60-minute candle here, which is a lower body, it's at 0.7748. Market's been consolidating within, and the 20 MA is starting to slope sideways to potentially upwards, so potential reversal is on the cards. Going to a 10-minute chart, I mean, you can see clearly here, there's the inverted head and shoulders formation. I mean, I can show you from here if you like. Okay, so you can see here, this is your potential here for a head. As you can see here, you've got your left shoulder here, and the whole concept is that we're making a higher low. We're making a higher low. Excuse my little daughter, she just happened to pop in, and my son's happened to pop in as well. Okay, go outside, you and your food. I'm just making this video. I'll speak to you in a second. Okay, so excuse that, my little daughter and my son have just popped in. Okay, so basically you can see here the double bottom, or you have no lower low. Okay, so you have a double bottom scenario here, provided, I mean, this is a key signal here, provided you have the fib of 61% holding and 75% holding, then you have an inverted head and shoulders formation right now that's in play. Now you can say that's a double bottom, that's the head, or alternatively you can even look at this pattern here. So you've got left shoulder here, there's your head, and now we're looking for this right shoulder here, and off we go. So you've got two inverted head and shoulders in the same space. So again, the key will be holding this pivot low here, 0.7750, which obviously corresponds in a larger time frame. And obviously once we do break the fib 75%, according to Mr. Bulkowski at his patternsite.com, those of you that are interested, patternsite.com, one of the best technical analysis websites out there, and certainly worth visiting. Okay, it's called thepatternsite.com, sorry. You can see here, where are we? Come on. Okay, here we go, thepatternsite.com. Here we go. Okay, so it's thepatternsite.com. Excuse me, certainly visit that, and his technical analysis books are very, very good. Okay, right, so that's the situation you find yourselves in. Now you can corroborate that, and based on intermarket analysis, one should always corroborate and verify a cross-market analysis. So for example, Aussie JPY, look at the Aussie JPY chart. I mean, you have a daily chart here now, and you are looking at potential support on the daily chart. You can look at a 4-hour chart. You can see the market has been having, again, you've got bottoming tails there as well. You can look at a 60-minute chart. Again, the market really hasn't made lower lows or lower highs, and again, you are looking for a potential reversal here, a falling contracting wedge. And again, on the 10-minute chart of the Aussie JPY, you can see an inverted head and shoulders formation. So again, that needs to be respected as well. So left shoulder here, you can call your double bottom head here, there's your right shoulder, and off we go to the races. Okay, that needs to be respected as well. Aussie JPY, especially given the fact that we've got a potential agreement in Greece, that's a risk on type scenario. So again, potential bullish equation, and the yen starts to fall and the Aussie JPY moves higher. Okay, Aussie CHF, again, that will be an interesting perspective to look at. And again, this is something that I go with or explain with my subscribers. This is exactly how I trade on a daily basis on my live analysis service, explaining each and every reason why I've taken a trade, so that they learn and they become independent in their thought process, and they can become successful traders themselves. Okay, this is no monopoly. No trader has a monopoly in the market. The market's free to all, equal opportunities for all. Okay, so my job is basically to educate, empower, and once they can fly solo, off they go. Okay, so daily chart here, you have a bullish engulfing candle. We've had a bottoming tail, so the move's over on the Aussie CHF. You're consolidating here, potential move higher on the daily chart. 4-hour chart here, obviously we've not made no lower lows, so again, that's a good sign for the bulls. Okay, a 60-minute chart, you can see again inverted head and shoulders formation. If I zoom in on the 10-minute chart, and we can see that we are making a base. The fact is that the market hasn't made a lower low. We're holding this stubborn and stern support, so why would you want to go short on the Aussie? If the Aussie JPY and the Aussie CHF break on risk off scenario, because we all know 3 areas where money generally tends to flow based on Mr. Obviously Murphy's work of intermarket analysis, who's the founding, well, not founding father, but he brought intermarket analysis into the foray, and he obviously allowed it to come into the public domain, so everybody for consumption, public consumption basically. Okay, so his interpretation and intermarket analysis states that whenever we have a risk-off scenario, then the 3 currencies that money generally tends to flow to is the Aussie CHF and the US dollar. Okay, so not the Aussie, sorry, JPY, CHF, and the US dollar. Okay, so if you have the Aussie CHF and the Aussie JPY making a base or a potential base, then how can one be negative on the Aussie USD? Again, add in the fact that you have the negative GDP data on Friday. Yellen and the Democrat link with regards to her expectation, or she wants the dollar to fall because they are concerned with regards to a rising dollar, and they are attempting to talk down a rate hike, especially given the weaker GDP on Friday. Hope that's answered the question. This was supposed to be a brief video. As always,